Long-term buy and hold rentals, it's a traditional way of buying it. You just buy rental properties, or you rent them, you hold them long-term. You know, somebody comes in, they sign at least a 1-year lease, or you may do a 2 or 3 year lease for a property, and you go through, and they call it mailbox money. It's slow. It comes in month to month, but you build wealth over time. This is a marathon. It's not a get rich quick at all. But the faster that you can do it, the faster that you can get there with doing it, with being able to get really good and putting systems in place to get those deals. And we talk about the rental income, the tax shelter from depreciation, whereas that now you can offset income and not have to pay taxes on a lot of this money. And then just over time, that real estate goes up. Because if you look at houses in the 70s, in the 80s, they were a little bit more expensive. In the 90s, they were a little bit more expensive. 2000s, they were a little bit more expensive. And you look at it now, it's like, okay, houses that were $70,000, $80,000 in the 70s, they're like, you know, $800,000, $900,000 now. So it's just over time that real estate is going up. And we talk about that, it's just after we went off the backing of gold for the dollar in the early 70s, it's like inflation's been killing and eroding the buying power of the dollar. And so that's why it's super important to just know with inflation and how to hedge the inflation. In real estate, it's not the only asset class out there. There's great other ways to build businesses and other asset classes that are a hedge, but real estate has definitely been one of the most tried and true over the last few centuries for us being able to build wealth. And there are a lot of millionaires and billionaires that at some point and that they keep their wealth through real estate and build it up. Snowball plan. So buy rentals, pay them off over time. You know, as you're paying them off, you figure out like, hey, I'm gonna pay this one off first. All the extra cash flow, I don't need it right now. I'm putting all my extra capital into paying the first one off. Guess what? Now all that income, that $800, $700 coming in from that rental, now all that money is paid off. Now all of my money is going to pay off the second one and then the third one. And so with that, you're able to build wealth. And a lot of people, you're like, oh, I don't want apartments. I don't want 30, 40 houses. I want to get my 10 houses and I want to pay them all off over the next 10 years. And so you go, you pay one off, and then it's just the snowball effect. Dave Ramsey is really big with this, with like credit cards and paying off debt, with being able to have a snowball effect. As you're able to just go through and pay off the highest interest rate card, then the next one, and just build momentum as you go. And next thing you know, you're halfway through paying off the 10, now you got 5 you're on free and clear, and all the cash flow from those 5 rentals is all going to pay off the 6. And then everything from the 6 is going to pay off the 7th and so forth. And now you're able to build wealth and accelerate it. Because I'll tell you that, you know, if you do this, that you don't have to have a grand portfolio. You know, a lot, are you guys familiar with Grant Cardone? You know, he buys he owns thousands of units and everything. It's like that's not for everybody. You know, and so that's the thing that you got to figure out. What's your goal? How much passive income do you need? Is it $5,000 a month? Is it $10,000, $15,000, $20,000? Just figure out whatever it is. And then from there, like, hey, in Birmingham, I know I can easily get conservatively $400 cash flow a month. I'm like, okay, cool. All right, how many of these $400 houses that I'm getting this cash flow, how many of them do I need to get to my number? And start thinking, it's like, okay, how fast do you need to get to that number? Is it 10 years? If you need 10 houses in 10 years, then you just need to buy 1 house a year. What does that look like? Is that, you know, talking to 5 wholesalers once a month, getting on their email list, calling 5 realtors a month to just see what they got coming up on market to get that one deal? Or, you know, maybe it's 20 houses. Like, okay, I need to buy 2 a year. And okay, what strategy will get me there? But it's like, okay, I need $40,000 a month. Okay, well, you probably need to start looking at apartments. You need to start looking at different levels of scale, because if you want to get from here to California, there's many ways you can get there. You can get there by train, you can get there by plane, you can get there by car. It's like, okay, if you need to get there tomorrow, the only way you're going to get there is on the plane. So you need to get there faster. You need to probably use an apartment vehicle if you need to get there to get to your cash flow number faster. But if you got 20 years to get there, it's like, okay, we may jump in an RV, we may go stay in Detroit for a year or 2, go here, we're going to go to the Midwest, stop there, go stop at the Grand Canyon, and then we're going to get there in 10 years or whatever. But, you know, you just got to look at the vehicle that you want to use, the strategy that you want to use to get you to your goal fast as possible. And what I want to say fast as possible, to get there when you want to get there. And so you can start with single family, but you don't have to end with single family, and that's okay.